Welcome to Coffee with the President. I'm Lori Sinclair, the 2024 President of the Kitsap County Association of Realtors. And today I'm talking with Kay Johnson of Bainbridge Lending Group, and we're talking about reverse mortgages. Welcome, Kay. Thanks for joining me this morning.
Thanks, Lori. I really appreciate you having me on to kind of give a brief overview of reverse mortgage options that are here in Washington State. A lot of people are skeptical of things they don't understand, so this is a great forum and opportunity for me to kind of answer some questions and kind of just help people understand the product a little bit better.
Absolutely. I'm so glad that you had time available. So I'm just going to start with, a lot of people don't even know what a reverse mortgage is. Tell us, what is a reverse mortgage?
Well, a reverse mortgage is administered by HUD and it's insured by FHA. So there are protections in place for borrowers. Reverse mortgages have been around for quite a while, but the biggest, the bulk of most recent protections for folks came about in about 2014. So some of the stories you might have heard or myths that you might have heard too were probably from loans that were prior to that. So it's great that they've got protections in place now for borrowers that are doing the reverse mortgages today. So excuse me one second. The Consumer Financial Protection Bureau, CFPB, also kind of oversees loan officers and banks to protect consumers on these products. So there is a lot of oversight for these loans.
Okay. But what are they? What would, because a lot of people don't even know what they are. What is a reverse mortgage? What's that mean?
Gotcha. So a reverse mortgage is a loan that allows senior homeowners to access equity that's already built up in their property, to tap into it for any multiple number of reasons. A lot of people I see take out reverse mortgages to pay off their current mortgage if they still have one. That's one of the main things that I see. Very common. It eliminates the current mortgage on the property. They are taking out another mortgage going on the title, but it is a reverse mortgage. So your payments on reverse mortgages are optional. Many people don't pay a payment on a reverse mortgage. They are deferred loans. Your balance on a reverse mortgage increases every month because you are accumulating interest. And on the loans that offer a line of credit, which is a big benefit, whatever you take out also accumulates interest. So the loans do become due and payable at a later time, and that's usually whenever you decide to sell the property. If you move out of the property as your primary residence, because it has to be your primary residence, that's a key factor here. Or if if you end up having to go into a nursing home, or you end up buying another property in Palm Springs and you're there more than 6 months and one day of the year, then you're no longer in your primary residence. So that's when the loans technically become due and payable. So they're deferred interest loans, basically.
Okay. So, if I was an eligible homeowner and I got a reverse mortgage, so what I'm essentially doing, I'm just kind of repeating to make sure that I understand and everyone else listening understands. So you're getting a new mortgage, and what that mortgage is, it's going to pay off whatever your current mortgage is, and then it's also going to give you kind of like a line of credit. Am I right? Now, is it going to give you that equity all at once, or is it giving you monthly payments to you of that equity that you have in your home?
There are multiple types of reverse mortgages that you can get right now, but the FHA-insured HECM, which is the gold standard now, the borrowers need to be 62 years old or older. You can run into a situation where a homeowner is over 60 62, but maybe their spouse is not. They're considered a non-borrowing spouse at that point. They still have some protections in place for them as well, but there are differences between an eligible non-borrowing spouse is someone who is married to the borrower at the time they took out the loan, continues to live in the property. They don't live in Palm Springs. They're living there, and they are, just on the loan when the person, say their spouse might pass away or move out, and they do have protection. But there are fixed rate reverse mortgages and there's adjustable rates. The fixed rate reverse mortgages pretty much give you your cash all at once in a lump sum. Mm-hmm. Then there are adjustable rate mortgages, which allow you to have a line of credit. I've done loans for people who just wanted to pay off their existing mortgage, but they wanted that line of credit option. So if an expense came up, if a need came up, they have that available to use. They might not even use it for 10 years, but it's there. And the beauty of the line of credit on a reverse mortgage is that it can be canceled. So like back in 2008 when the markets crashed, my husband and I both had a line of credit from our local bank, and all of a sudden we get a letter and say, we're freezing your line of credit. It's no longer available to you. So that was pretty disheartening because then,
yeah, you don't have access to that.
You don't have it. So with the line of credit, adjustable rate options of loans, you can take out money when you want to. You can even do, even on the fixed rate product for the proceeds you get for that, you can determine, let me take that back. For the adjustable rate mortgages, you can actually determine how you want to receive the proceeds. You could say, hey, I want to get $5,000 a month. They can just automatically deposit that into your account, or you can, with a line of credit, just reach out whenever you want funds. It's not like you have a checkbook like a HELOC where you can write your own checks. You're actually reaching out to the servicing department of your mortgage company and saying, I need this, I need XYZ, and it's a pretty easy process from there.
Okay. Right. So you could have lump sum, or you could have like a line of credit where you basically reach out to them and then they give you, an amount that you have access to up to whatever your full equity was in your home when you took out the reverse mortgage.
Well, it's not your full equity. The amount of proceeds that you get are based on several factors. One is the age of the youngest borrower. So, obviously, the older you are, the more proceeds you have available. It's based on the value of your home and its interest rates, and also the maximum claim amounts that change every year for FHA reverse mortgages. Currently, for 2024. That claim amount is $1,149,825. So if your home is valued above that amount, you can still do a regular HECM reverse mortgage, but you will only get the proceeds up until that max claim amount number. There are proprietary, what we call jumbo reverse mortgages as well, which allow you to be younger. You can be 60 years old or older to do those, and they do go up to a maximum of like $4 million. So there is that option too for people who, like us, are starting to see prices skyrocket and home values skyrocket, and so there are options there as well.
But what would the risk be? Like, say I'm 70 years old and I want to tap into that equity of my home. What kind of risk would I be looking at potentially? Like, give me some of the bad news. Is there any?
Well, obviously you're tapping into your equity. So when you do decide to sell that home, you're paying off whatever you've accumulated on that loan. Because again, you can make payments on it if you want. You don't have to. So when that time comes when you sell, you are paying off that mortgage. So yes, you would have less equity when you go to sell it. That's generally what people are concerned about. is whether or not they're going to have any equity left for their heirs or that kind of thing. And it's all based on what your loan balance is when that time comes. I would probably maybe discourage someone from doing a reverse mortgage if they are in some heirloom property that's been in the family for hundreds of years and everyone's going to fight over it. I don't know if it's to really down that path. But the goal is that your appreciation value of your home will hopefully, and it has been in the past unless some major event happens, but will hopefully continue to appreciate. So while your loan balance is growing, your home appreciation is growing too. So the goal is that you have equity remaining in your home when you do the right.
Okay. So when we're talking about these, we talked a little bit about who qualifies, but why don't you tell us a little bit more about who qualifies to access these programs?
Sure. So on the HECM FHA-insured loans, you need to be 62, or one of the borrowers needs to be 62 years old. You can only do a reverse mortgage on your primary residence. So if you have investment properties, second homes, you cannot do a reverse mortgage on these properties. You must be a U.S. citizen or a lawful permanent resident. You have to receive counseling by an FHA-approved counselor. It's a requirement on any reverse mortgage, and that's a safeguard that was put in place to help borrowers understand what we as loan officers are explaining to them. It's a double stop. It's like, do you truly understand what this is about, how it works, when it becomes due, blah, blah, blah. So we're really happy about that because we're doing our best to explain the program to folks. But this is just a double
right.
thing. In fact, we have to have a signed counseling certificate from the borrower and the counselor before we can actually get that loan going.
Yeah.
So they have to receive counseling. And while you may not have a mortgage payment per se, you're still required to pay your property taxes, your homeowner's insurance, if you have homeowner's dues or condo's dues, all of those have to remain current.
Okay.
If they're not, or if the home becomes in total disrepair, city's coming out because there's a jungle in the front yard or backyard or, hoarding issues or something like that, if it gets to that point, the loan can be called due.
Okay.
Those are things you have to stay on top of. Always pay your property taxes, your dues, and make profit.
Okay. Well, that makes sense because that enables someone else to foreclose on the home, and so it puts the bank at risk of losing money. So you mentioned briefly that there's certain properties that qualify for these programs. Tell us a little bit about that.
Sure. So eligible properties are new or existing single-family residences, new or existing 2 to 4 unit properties. Now, if you were, which we can talk about in a minute, but if you were to purchase a 2 or 4 unit multifamily property, which you can do with a reverse mortgage, or if that is you have to personally live in one of those units.
Okay.
To do a reverse mortgage on it. But yes, you can up to 2 to 4 units. They can be FHA-approved condos, or if they're not FHA-approved, you might be able to get a single unit approval on that. And then some manufactured homes, as long as they meet FHA standards. So no investment, no second homes, no properties with illegal accessory units, mixed-use properties, co-ops, bed and breakfasts, mixed-use property with commercial use, or I've seen some issues where there were some properties that rural land and people were, raising goats or, that kind of thing. Those are not really allowed. You're not supposed to have business use.
Okay. That makes sense. But what if somebody was just raising goats because they like goats? That would
not a problem. Not a problem.
Okay.
Not a problem.
The weed
Very
control,
good.
you know.
I was on a farm for a while, so I get it. Yeah, but I had turned down a client a couple of years ago that had a beautiful property, but they were definitely using it as a business, and it was not allowed. So, yeah, so there's a lot of property options. There's a lot of usages for reverse mortgages. I'll talk about that for a second too. I see some of the most common things that I see people do with reverses if they're wanting to age in place, stay in their home, not move. They usually take out money to either pay off that mortgage, maybe they're remodeling so they can stay in it, could be safety issues or whatnot that they have. I see people taking out reverse mortgages who have retired early, whether voluntarily or involuntarily due to COVID, and they just don't want to access Social Security right now because we all know you get more as you wait.
Yeah.
It's a great way to tap into the equity for income. It is not taxed on your taxes like income. It's your own equity, basically, that you're using. So that's a plus too. I see people sometimes tapping into equity to actually buy a second home or investment property if they have enough equity or enough proceeds from the reverse mortgage to do that. I've seen grandparents take out money to loan their grandchild down payment for their own home purchase. So I've seen a lot of that. I've seen there's a huge increase in silver divorces. We helped a person not too long ago who was in a very nice, expensive home here on Bainbridge, but they were going through a divorce, and the wife didn't want to live in the house anymore. The husband did. He didn't really want to sell it, so they were able to do a jumbo reverse mortgage and have enough proceeds to pay off the wife so that she could do what she wanted out of the settlement of their divorce, and he got to stay in the home that he wanted, and it was a win-win for everybody. So that was just one unique situation.
You touched on something there I wanted, before we get too far away from it, the purchasing of a second home, like tapping into that equity to purchase a second home. And let's talk more about that, because I could see that being, a way too. A lot of people worry, well, where will I go if I sell my house? So they don't sell. So tell me a little bit about that.
Well, there's two different things we're talking about here. And we haven't even touched on this reverse for purchase option yet.
Yeah, I think that's where I was trying to go to.
That's a little bit different than someone who wants to stay. So you've got someone who wants to stay in their current home as their primary residence, but maybe they want to go buy a little,
like a lake house or something.
House,
yeah.
I don't know, wherever. That's one thing, and of course you've got to see how much you're going to be able to get out of the reverse mortgage. So that's where you call me, hopefully me or a local reverse mortgage person. You see ads all over TV all the time. That's great, but they're not local. They're not going to have the patience level. They're not going to be here when you need them.
They're not going to know what it takes to close a loan locally here. Like sometimes we get these out of area lenders that, they want us to do testing that just doesn't occur here or whatever, and they end up blowing up the deal.
I mean, and you have to have patience to do these loans. And there's a lot of loan officers that don't do reverse for that specific reason. They take longer. Sometimes I talk to people and I might not hear back from them for a year, 2, 3. I mean, it's time to really decide if you want to do this type of loan and if it's right for you at the time. And so anyway, you've got people who want to stay in their current home and maybe buy something on the side. If they have enough equity, if they can tap into enough proceeds, that might be an option. Then there's this other product called reverse for purchase, which is starting to really get more known. I'm trying to remember when the first one came out. I think I made a note here. 2009.
Okay.
Reverse purchases came around. They are the 3 states in the U.S. right now that have the most reverse mortgages are California, and I'm sure that's because of the home prices, and then Arizona and Florida. No, California, Arizona, and Florida. Yeah.
Okay.
And Arizona and Florida make total sense because that's where a lot of
All
people
the
live.
retirees. Yeah.
So those are the top 3 states. Washington is not far behind. You know, our home prices are going up. New York is in there as well, and probably the top 10. But so anyway, they are getting to be more common. The loan officers who are doing these on a regular basis are trying to educate our realtor partners and our financial partners and the public that this is an option. Mm-hmm. And what a reverse for purchase is it basically allows a homeowner, if they're planning on selling their home, they want to right size, they want to find a better property to meet their needs right now, instead of remodeling their current home or whatever, be closer to their family, whatever the situation is. It allows them to put a portion of funds down. Now, generally, this is a pretty big chunk. I mean, it's probably 50%-ish, and it all, again, depends on your age value, and I can run numbers for anybody, but it's a pretty big chunk. So if you're selling one house, you're taking a pretty big chunk of those proceeds to put down towards the down payment on a new one, but then the reverse mortgage comes in and picks up the difference. So the benefit there is that you're not selling your current home, putting every single dollar, perhaps, from your sale into another property. You're able to still keep a cushion of funds in your own investment account. So it's giving you that extra money that you need. You can save some of that money, assuming the numbers all work.
Yeah.
But the beauty of it too is that again, you have an optional mortgage payment.
Yeah.
And that's really so beneficial. I cringe when I have senior clients that are coming to me for loans, and you know, we're talking about people that might be in mid 70s, 80s, and why do a 30-year mortgage? I mean,
Yeah.
but you have to qualify for it. You have, the debt to income ratio. I mean, normal traditional loans, and a lot of seniors are limited on their income sources. So
yeah,
they might think they're stuck in this home. We're seeing that all over right now. People are afraid to move. Where am I?
Yeah.
How am I going to afford it? I've got a mortgage. There's all these reasons why people want to stay, but they don't know there's options. So these reverse for purchase loans, these are FHA loans, so they're not conventional. So they must abide by, there's an FHA appraiser coming out, and for FHA loans, as you may know, those appraisers are really looking for safety.
Right.
Because we want to make sure these folks are safe. So if there is something that gets called out in an FHA appraisal on a purchase now, the home buyer cannot pay for that repair. It is totally incumbent on the seller.
Okay.
So that might be one considered a negative.
Yeah.
Or, a listing agent. But ideally, and what I try to educate my realtor partners on is don't show folks homes that are in disrepair. I mean,
yeah.
Number one, they don't have the time to fix them. I mean,
especially if you're dealing with this product. So I think that you brought up a really interesting point there with, this is a reverse mortgage on the senior's current home. Like they're getting all the money from their current home to purchase this new home, but the new home has to qualify. Like it's going to be appraised in order for them to get the loan against the other home. Yes, I think that's really interesting.
Every reverse mortgage, no matter if you're doing one in your current home or you're trying to buy one, you have to have an appraisal.
Yeah. Yeah.
It's the value that appraiser puts is what we base all of our numbers on. So it's not optional. It has to be done. I would say on a reverse for purchase loan, I would probably say 45 days from start to finish. And again, that can vary based on how quickly that appraiser can get out there. I mean, right now we're not having any issues with appraisers getting things done really quickly.
Yeah, but that could change. That could change.
Now back to the reverse for purchase too. I do want to say that in a market like we're in right now, where you've got folks massively competing, outbidding each other, paying cash. If you're a listing agent, you've got these offers coming in and you've got, super high bidding and you've got cash and then you've got this FHA reverse mortgage. It might not be you know what I mean? It may not be the strongest offer. But in this market, I don't know. I mean, we're seeing them happen. They're being done.
Well, I think that in this market, there's still a lot of cash out there, yes. But at the same time, there are a lot of properties that we see sitting that are great properties. It's just a lot of people don't want to, go get that 7% mortgage. That's daunting to a lot of people. And they think that by waiting, they might end up with a lower interest rate. Unfortunately, that also means prices go up. So false economies, but that's a whole other topic.
But with the reverse, and the main reason people are concerned about the interest rate again is because of what their monthly payment will be.
Yeah.
And
you don't have that issue, right? So in many ways, it's actually it may be the more qualified offer because you're not having a person that's going to suddenly, they didn't lock their rate in time. And the next day, the interest rate goes up, and now they suddenly can't qualify.
Right.
So
yeah,
that's
fair. That's great. Yeah. So, for sure, it's a great option. I'm trying to spread the word. There's other loan officers here locally that are also trying to just educate realtors. Things they don't understand, and so I would encourage any realtor partner, any senior who just wants to know what numbers might look like. I do have a website at equityforretirement.com. You can go on there yourself anytime. There's a calculator on there. You can plug in your year born and the value of the home you might be wanting to buy, or your current home if you're thinking about aging in place, and just kind of see some rough numbers. To get a more detailed report, call me directly, and I can run an actual proposal package for you, which doesn't obligate you to anything. It just gives you all the numbers and like a estimated amortization schedule, so you can kind of see where your home value may be, where your loan balance might be in 5-10 years. So you can kind of make those decisions a little bit more accurately on whether or not it might be a good fit for you or not.
Yeah, education is key in these products. You have to do your research. Well, Kay, thank you so much. I think this has been a great conversation. I really appreciate it. And I'll try to put those details both when I upload this to YouTube as well as when K-Car gets it out on socials. But if you're a senior looking into investigating these reverse mortgages, or if you're a realtor here in Washington State, please, I encourage you to reach out to Kay because she's a great resource on these. So
I appreciate it. Thank you so much, Lori.
Yeah, thank you. I can't wait to see you soon.
Yeah, I know. I'll have coffee with you any day, girl.
Yeah, awesome. All right. Well, we'll see y'all later.
All right. Bye.
Bye.